SP500 daily time frame. This was your first wave of bearish market and this is your counter trend correction. And next step is next bearish wave, which will make new lower low or retest this last year low. Technically, you can see this first wave has retraced 50% and next target will be 61% retracement level. But main thing is this resistance level 43.25. So this resistance is most important level for an entire stock market, not just SP500 but all stock market. So if you are selling from this bottom and this low, then manage your risk up to this level, because by the time price reach that level, all the seller who are selling since last year, since December last year, and this bottom which was made after Fed temporary QE, they need to manage their risk up to 43.25. This is the maximum strength that these bear can handle. And this bullish candle has already created big confusion for all the trader. Because if you look this bottom and especially this low, and you can watch my last video, before you get top in SP500, there are two monetary policy steps. Number one is last hike. When last hike was confirmed by Fed speech on Friday, immediately it made top, it came down. But because of AI bubble, terminal rate is now going up again. But that May FOMC was your last hike. So either top is near, and if market does not make top in upcoming time, then next step is first rate cut. So market can make top on last hike or first rate cut, or maybe between these two monetary policy decision. And I am telling you, since December until last hike confirmed, market will not make top, because FOMC member are now creating confusion. They have paused rate hike. Small central bank already did. Now it is time for Fed. But FOMC member like Kaskari, every day they say a new thing. But you as a beginner trader, after last hike, the time for bear market crash start. And like I am saying since last year, rate cut is sign of central bank panic. That's mean your recession is now going out of control. First recession was soft landing, then it became mild recession, and now next step is hard landing. And because of FOMC minute last week, Fed is saying first rate cut can be in January FOMC meeting next year. So this is maximum timing that this market can go up. And debt ceiling drama, I do not need to explain you why, but now all the information is available on all news channel. Because if you see, to control inflation, they are creating recession. But in 2024, there are election, and not just this time. You can read entire history. They create recession, but they never say this is created by central bank. So they need some reason to explain in books, to public that this is the reason for recession, not the 5% interest rate. So if you consider time scale, then market make top either on last hike, or if it does not make top, then you have to wait till first rate cut. And first rate cut can be September FOMC meeting this year. And technically focus on this 43.25 level, because all the seller they have their SL above this level. Until all the seller who are recommending to sell since October last year, since December, since March, they need to turn bullish. When all of this public is bullish, then it will go down. So 43.25 key resistance, 3800 key support level. And if you see NASDAQ daily time frame, it is flying like there is no recession, like there is no difference between 5% Fed interest rate and 0% Fed interest rate. Last year AI was not bubble, but now AI is now bubble, and because of that bubble this is flying like Fed interest rate is now 0 and they are doing QE monetary policy. So this bearish wave have retraced 61%. So this is your fifth retracement level, and this area 15184, this is your horizontal resistance, and this can be your rising wedge chart pattern. And now price is testing upper trend line, and there are many things which are wrong about this AI bubble, and most important thing is time. This bubble can be right, but timing is wrong, because central bank do rate hike, interest rate go up, then they pause, then cut interest rate, then finally interest rate make bottom, and this cycle repeat until new crisis come, because this bubble is like dot-com bubble. Then there was GFC, housing bubble, and there are many small bubble which we do not know. Recent one like NFT and crypto bubble. They have one thing in common. All of these bubbles start when monetary policy make bottom. But this bubble is starting when rates are going up. So this bubble will not survive. Next step is rate pause. Already started. Next step is rate cut. Your first cut and final rate cut. And in between emergency rate cut, which is most bearish thing, because rate cut will start in 2023. It will not end until year 2024 ends. So this AI bubble will not survive, and technically you should focus on 14349 level. That is key level, because retracement and trend line both are at same place. And your key resistance 15184. And if you want more clear information on this AI bubble, then best way to measure this AI bubble is Nvidia stocks. Predicting SP500, NASDAQ, where these things will go is completely depends on this stock. Because last week you can see it opened with gap and it is trading on all-time high. Because when FOMC minute came last year, when everything made bottom. Gold, SP500 and many other things. There was no such thing as AI bubble. But right now, AI bubble most important thing right now, because this bubble will decide timing of rate pause. Right now, Fed is giving first FOMC next year. If that timing decrease or increase, that's mean AI bubble is increasing or decreasing. And as a beginner trader, if you see bottom and this top, then on bottom you always have a fear that market will crash and Fed will do rate hike until 2024. Top, you have FOMO that AI will change everything, that it will go to moon. And now you can see Jim Cramer is bullish on Nvidia stock. So end of this bubble is already started, and AI is only thing which are stopping SP500 and NASDAQ from market crash. Because if you see, as a beginner trader, there is an inflation crisis, and to solve that problem, central bank are creating recession, and to create recession they are doing rate hike, and now interest rate is more than 5%. But because of AI, that inflation problem can be solved without creating recession, without doing 5% rate hike. That's why people are mad about this AI bubble. And since this is stagflation, when they will do rate cut to stop recession, inflation will return again. And because of AI, people think that inflation will not come, that stagflation is already dead before it start. So this is nothing but central planning to distract all of you from main topic, recession. This month there will be 1 year to their 75 basis point rate hike, and now lag effect will only increase. This was bear market after tapering was started, and it started with tapering, and rate hike was started with 25 and it ended with 75. Before rate hike completely end, they have given you new dream which called AI. Just wait till November FOMC meeting this year. You will see magic of 5% interest rate. All of this bubble like AI will go to black hole. And for intraday trader, this looks like your ending diagonal chart pattern, and now price again testing upper trend line. Because of that AI bubble, this video is long, but this is beginning and you are not seeing second part of this AI bubble, which is most political. That is why AI bubble cannot survive this 5% interest rate. And before you say you are bullish on AI, you should study Joseph Schumpeter and study famous concept introduced by this economist, creative destruction, that AI will solve inflation problem, it will solve recession problem, and before central bank say anything about stagflation, this will also solve stagflation problem. But think yourself, does this politician have courage to see creative destruction? And unemployment rate because of 5% rate hike, and AI, who will stop that high unemployment rate? This is most dangerous thing